Welcome to the Free Court Show with your host, Jason Hartman. No, Jason's not a lawyer. He's just a regular businessman, a regular consumer. The legal system is broken and most people cannot access it. Jason and his powerful guests are here to help level the playing field so that you, the consumer, can better understand your rights, have options and recourse, and listen to the experts explore new products and services so that you can be an empowered citizen in the system. And now, here's your host, Jason Hartman.
It's my pleasure to welcome Justin Leto. He is one of the founders of Level Insurance, and this is about litigation insurance, an emerging new force in the legal marketplace. And we're going to talk about another force that is also very significant, and that is litigation financing. And this really can level the playing field, give plaintiffs more rights to pursue cases that they might not otherwise be able to pursue. So listen in. I think you'll enjoy this. Justin, welcome. How are you?
Hey, Jason. Thank you for having me.
It's good to have you. So what's going on in the legal world? I mean, are these things new? Is litigation insurance a new thing, or is it just becoming more popular now?
Well, I think, first of all, litigation insurance, the way that we have done it, our company is called Level Insurance. My law partner and I, we invented this insurance, which is the first of its kind. Just to give you a little background, anybody who goes to a plaintiff's lawyer, if they're injured, from a medical malpractice, product liability, any type of personal injury, or even commercial litigation matter, a lot of times those lawyers take those cases on a contingency basis, which means that the client doesn't pay any money for either fees or costs, and the only time that they pay is in the event that there's a successful outcome. So the lawyers take all of the risk financially on those cases. That's the way it's always been done, and that's the way it will continue to be done. However, when a lawyer loses a case like that, their own personal finances for, all the time that this has been going on were at risk, and they would lose that money with no recourse to get it back. The client doesn't owe them any of that money back. So with litigation insurance, what we provide is an option for the lawyer to insure those cases so that in the event that they lose, the client's money will then be reimbursed. The cost will be reimbursed to the lawyer pursuant to that insurance. And it really is quite innovative because it allows lawyers to take on cases for clients without concerning themselves with the costs.
Yeah.
Oftentimes, if a client has a case, the case requires a certain amount of expenditure, but lawyers can pick and choose where they're going to put their money. It's always been my belief that a client deserves the representation where costs are not a factor. Unfortunately, with big insurance companies and big businesses on the other side who spend money indiscriminately, lawyers sometimes have to control their expenses, and that could ultimately be to the detriment of the client. With this type of insurance, the clients don't have to be concerned that their lawyers are going to cut costs because they have no reason to if they're going to be reimbursed in the event of a loss.
Right. Okay. So here's what I have found in the marketplace, and that is that contingency attorneys will take your case, but they will really push you to settle, because they do this cost-benefit analysis when they're on the hook for paying, and it's just too risky to go to trial. It's way too expensive. There's so much more prep work. Whereas if you can, file a case, maybe do a few motions, maybe some discovery, and then settle it, that's going to be the expedient thing to do. So very few cases actually make it to the courtroom. And I would argue that lawyers many times, and look, they're business people too. I can't say I completely blame them for this. They kind of sell the client down the river sometimes because of that expediency. I mean, maybe that's not a fair statement. Feel free to argue with me, but what do you think?
No, I don't agree. I think that's a broad statement, and I think that in a lot of ways it's a generalization that's an unfair generalization. I think that in any profession, there are good and there are bad, right? And I think that for the most part, the lawyers who take on the cases that are more complicated, more expensive, and carry more risk are the lawyers who understand that risk, they know how to budget for that risk, and they're willing to take the risk. And I don't think those lawyers sell their clients short. In fact, the clients are ultimately the ones who make the decision as to whether a case should settle.
Right.
So I wouldn't agree with your statement.
Okay. Well, I'm saying is that I think your industry and what you offer can prevent that, because then the lawyer isn't under such extreme pressure. They can afford to practice their trade, which is good, right? They want to litigate and do lawyer things. They don't want to be business finance people.
I think those are two separate. Your point is correct, your second one. The first point about lawyers doing things that are not in the best interest of the clients, I wouldn't agree with that. But what I will agree with is that cases have become expensive, much more expensive than they should. That's ultimately because of maybe over-lawyering on the defense side, pushing too much paperwork, the expensive experts. Overall, the expense from getting from the beginning of the case to the end of the case has continued to get higher and higher and higher, and I don't really see that stopping. I think the cases are going to continue to get more expensive. So lawyers have always, historically, taken on that risk and given their clients what amounts to an interest-free loan. By spending tens or hundreds of thousands of dollars on one individual case, with the reward being that they get that money back without any interest at the end, that is not really good business practice. Of course, they get a fee, but lawyers' fees and costs should be independent of one another. Mm-hmm. What you put out as a hard dollar expense on a case on the behalf of a client is not something that should ultimately cause you personal loss, whether it be, unable to pay yourself a salary or unable to pay your overhead. That's why litigation cost protection from our company level insurance is so important. Okay. Is that, to your point, with these cases getting more and more expensive, lawyers now have a vehicle by which they can protect that expense, ultimately benefiting the client, because the client, A, can have their choice of lawyer, whereas right now only maybe the lawyers that can afford a certain case,
right, exactly,
or afford the financial loss.
I was going there too, because now this brings more lawyers into the marketplace that can do these cases. Because before, only a lawyer who's really kind of financially sound. I mean, look, we all saw Aaron Brockovich, but that's probably a pretty rare occurrence, right? Usually it's going to be a bigger firm or a lawyer who's pretty sound, who can afford to, put out without getting anything back, maybe never, or at least waiting a long time, right?
Right, and that limits the market. And so the big firms ultimately are the ones that clients have to go to. Even a client may come to a small firm and really like the lawyer. The lawyer may be very capable of litigating the case, but that lawyer may be concerned with the expense that they have to put out. So there's two choices. A lawyer has to bring in another lawyer to co-counsel the case. So the lawyer with the limited funds or the limited risk appetite may be the lawyer that does all of the work, but they have to do it for less money because they have to bring in some financier to help them. Yeah. Or that lawyer just doesn't take the case and the client has to go find another lawyer who's ultimately second or third choice. And this is all because of money. Yeah. And maybe it sounds naive when I say it, but I really believe it. I don't think that money should control the decisions when somebody needs to find an advocate that is the advocate of their choice. Yeah. And with our product, we try to change that. We try to level that playing field by giving people choice, because lawyers who can insure themselves for a very fair and very low cost really have no reason why they shouldn't be able to finance these cases.
Give us an example, if you would, Justin, on how that cost breakdown looks. Because if you're an attorney, obviously you really need to know the details about this if you're listening. But if you're a client, if you're a plaintiff, you need to have an understanding, because it's going to influence the dynamics of your attorney relationship and, whether you're even going to have an attorney relationship in the first place. How does it work? Give us kind of an example, if you would.
We actually make it real simple. The insurance is all bought online and without any human interaction if you don't want it. The client goes to the lawyer, hires the lawyer, they go over a budget, and the lawyer decides that the budget for the case is $50,000, which, is a low-cost medical malpractice case or a high-cost auto case, right? Okay. That lawyer is budgeting $50,000, so they decide they want to insure it. The insurance is a 7% premium of whatever they decide to insure. So that $50,000 would cost them $3,500. That $3,500 is paid either in full or over the course of 8 or 9 months because we can finance the premium. And then the case is litigated, tried, and the case is lost. That lawyer makes a claim, and all those costs are reimbursed to the lawyer up to that policy limit. So it's a very simple process. And what's interesting, in Florida, where I'm a lawyer, we took this matter to the bar and asked the bar to opine as to whether that particular cost of $3,500 on a $50,000 policy, for instance, could be passed on to the client as a litigation expense. And the bar did an analysis, and after speaking with us and hearing debate, they determined that it could be under certain specific circumstances outlined in their ethics opinion, because they saw that there was a direct benefit to the client. That the client benefited because the lawyer was going to litigate the case fully on the merits without concern for cost, that it could create greater negotiating power because the defense, who spends endless money, would now know that costs could not be in influence on the plaintiff's lawyer, that they were going to litigate the case only based upon the merits and not based on what you termed earlier as sort of selling the client short. So at the end of the day, this is about balance, and all defense. If you get into a car accident, Jason, and you're at fault, you have insurance, and your insurance company is going to pay all your
Right. Why not have it on the other side? Yeah.
So the other side should have the same opportunity to protect themselves. And right now, until we invented this product, they did not. So this is a way to protect everybody.
I agree. Okay, so it gives really, both sides their day in court. Is it really applicable mostly to personal injury? I mean, personal injury is the biggest part of law where there's contingencies. Are business cases too complicated, or corporate stuff, investment ripoffs, whatever. There's a whole panoply of litigation out there.
Right.
Is it really kind of geared toward personal injury, or how does it work?
Well, so no, it's not geared toward personal injury. I think the early adopters of the product were mostly personal injury lawyers because, like you said, it's the most obvious use case for our insurance. However, I can tell you that we have sold plenty of policies to cases involving commercial contingency, cases of fraud, cases of banking issues, business to business type of litigation. So it applies to a lot of different litigation. And what's interesting and what I've seen putting my lawyer hat on is there is a trend right now where lawyers are much more willing to take business cases on a contingent basis rather than an hourly basis, and it benefits both the lawyer and the client from a fee perspective. The client doesn't have to get monthly bills, which ultimately crushes the client financially over the long term. The lawyer analyzes the risk and can get a great upside if they get a good result. It partners the lawyer and the client on those business cases. And with our insurance, one of two things can happen in the business-related cases. For your listeners out there who are business people and are involved in litigation, it's a really good way to get to negotiate with your lawyer. So you tell your lawyer, listen, I'm the one paying the cost, because oftentimes in business cases, the client pays the costs and the lawyer may take the fees contingent. The client may say, I'll hire you on your 30 or 40% contingency fee, and I'll pay the costs, but I want you, the lawyer, to insure me, buy my insurance on my behalf. It's 7% of what you budget. That way I know as the client, if I lose this business case, I will have no financial risk. The money will come back to me. So there's multiple ways that business cases can benefit from this insurance as well.
That's great. I'm glad you mentioned that. So first off, why is it that in the past, the business cases were rarely taken on contingency, and why is that changing? Are you going to say it's because the insurance is cropping up, or is that happening just anyway?
I think it's a trend that's been happening because I think lawyers have opened their eyes to that opportunity. There's just some firms that have been traditional business-to-business commercial law firms that are big, and they don't have a structure to figure out how to take on risk for contingency cases. It takes a certain personality and a certain structural component to a law firm to be able to handle contingency cases. Most of those firms are a little smaller. They're a little more focused on the partners doing the work. And I think the big corporate firms just haven't been able to figure out how to structure that because they're used to a pyramid of billing. But the firms that have figured it out, or the smaller firms that are willing to do it and present it as an option to the client, a lot of times, at least in my experience, the clients are very happy to explore that opportunity because while they may pay more in the event of a successful recovery by way of a percentage, when you balance that against paying monthly on an hourly basis with no guarantee of recovery, that risk is significant to the client, and removing that risk and paying a premium for it in the end is oftentimes worth it.
How come in the past, though, business cases weren't really contingency-oriented much?
I think it's because most business cases in the past were handled traditionally by law firms that simply did not use the contingency model. And now that firms have started, I can tell you that a lot of the bigger personal injury firms that I've spoken with, they've recognized that with enhancements in vehicle technology and self-driving cars and things that make automobile accidents less deadly and less.
Maybe.
There's less litigation. Fortunately, because we on the road are much safer now. There's other ways in which they've had to pivot because that's been the core of their business.
Yeah, good point.
And so they found an opportunity here.
Yeah.
So the opportunity is to offer businesses the chance to do their work on a contingency.
Yeah. Okay, good point. Okay, a couple quick questions for you. I know we got to start wrapping up. Do you do it in every state? Do you offer the insurance in every state?
Every state except for New York.
Okay. Oh. I find when I do business nationwide, I just find that every time New York and California are the problem children. They're just the ones that always have their own special set of laws,
California's got tons of regulations, but they don't have an issue with this insurance.
Okay.
New York, it's not that they have a problem with the insurance, it's that they have certain rules there when it comes to anything that's considered legal expense insurance that you have to be, I believe you have to be a state carrier as opposed to an out-of-state carrier. I think it's a drive to keep the business in state, so we haven't been able to penetrate that.
Yeah. And are you really an insurance company per se where, insurance companies have all sorts of complicated regulations like reserve ratios and this and that, or is it not really like insurance?
No, it is insurance, but so Larry Basuk and I, my law partner and business partner, we invented what we call litigation cost protection, which is the coverage.
Yeah.
And we own Level Insurance, which is the brokerage. But we are backed by Aspen Specialty Insurance. They are a large insurance company, one with reserves and one's with a market cap, and they're a publicly traded company. And they are the risk-bearing entity. So they're the ones who ultimately would pay claims in the event of a loss. Okay. So it's not Justin and Larry at Level Insurance. You have a legitimate, large-scale, reputable, A-rated insurance company that is the one whose paper it's on.
It is real insurance. Okay, good stuff.
Oh, yes,
and,
absolutely.
So every state except New York, do you underwrite the case itself, or can anybody get it, or is any attorney eligible? Is it more about the attorney or the client or the case, or... Tell us about that real quick.
So we underwrite it based upon a very limited amount of criteria. The underwriting on our website is just asking the lawyer, who ultimately is going to be having to answer the question as to whether they have been disciplined by the bar or the federal courts, because we won't underwrite lawyers that have had disciplinary issues. The case, the insurance needs to be purchased within 120 days of service of the lawsuit. So after you file a lawsuit, you then have to serve the defendant. After that service has been accomplished, the clock begins to tick and you have 120 days to buy the coverage. Interestingly, though, whereas most insurance binds on the day that you buy it and there's no retroactive coverage, we have developed our product so that the coverage is retroactive to the day the lawyer was retained. So why that's important is that for people who have medical malpractice, product liability, or business cases where they do a lot of forensic analysis before they file suit, they've already spent $10,000, $20,000, $50,000 before they even file. If they buy this insurance after spending that money within our time frame, they still get credit for coverage for the money they spent before buying the insurance. So that's a nice little aspect to it.
Right. Very
and then the maximum coverage is $250,000 as of right now.
Okay, got it. So, and is there a minimum? Can you buy 10 grand?
3,500.
Oh, 30. Oh, wow.
3,500 is the minimum.
This is a small claims case.
Yeah, we do. Well, 3,500 in cost, though, if you think about it, that's probably about a $10,000 or $15,000 auto case. So some states have certain requirements for automobile cases where you have to reach a threshold of proving that you have a permanent injury to receive any damages. So for those smaller cases, this coverage is helpful.
Yeah, that's good. Why the 120 days, though? Why is there that limit?
Well, initially, when we launched the product, it was 60 days. And then we expanded to 90, and then now we've recently expanded to 120. And that's all based on it's a new product. It's never been done before. For the carrier that agreed to sign on to this, Aspen, they had never seen performance data on this because it had never been done. So for them, they took a risk, and thankfully they did, in deciding to put this product to market. So they wanted to do it slowly and conservatively, and I respect and understand that. As they've gotten more comfortable, we've been able to open up certain parameters like the date of service. Primarily the reason why that is in place is, think about it, Jason, if somebody were to be able to buy this coverage at 7% as they're walking into the courtroom, we would be making a 50-50 bet on win or loss.
Flip a coin.
So it has to be purchased at a time when we're not going to be adversely selected against, and that's why the early stage is the time to buy it.
Yeah, okay, makes sense. Very interesting stuff. Give out your website and tell the listeners where they can find out more.
It's www.levelinsurance.com. The coverage can be bought by a lawyer or by a client. We've had clients of lawyers call us saying, a lawyer, we want to hire this lawyer, but they want us to pay the costs and it's expensive. And so can I buy the insurance to protect it? And of course, the answer is yes. So it works on both ways. And it's exciting and an innovative product. And we think that as it begins to scale, it's going to become the new norm in litigation.
Yeah. I think you're going to do really well with it. Justin Leto, thanks for joining us.
Thank you, Jason.
Thank you for listening to The Free Court Show. Be sure to subscribe, rate, and review the show on iTunes or the platform of your choice. You can find the show notes and resources for today's episode at freecourt.com. Remember that guests' opinions are their own and information is of general nature, so be sure to consult appropriate tax, legal, and other professionals for specific advice.